HPE is delivering on its promises. You might not like their strategy, you might not like their promises, but they're absolutely delivering on that single-digit revenue growth, and their strategy of segmenting growth businesses, core businesses as a service makes sense to me, right? Because when you look at the growth in obviously what they consider their growth businesses, which is intelligent edge, you've got double-digit growth, right? And that's incredible. When you look at as a service, I mean, as a service orders up 61% in 2021. As a service ARR up 36%. So, and cash management, just core promises that they make, they're delivering on the promise. And I think what has to be frustrating for the folks at HPE is the fact that, okay, they make promises and there's a certain price target, they hit those promises, and then they get beaten up out there in the marketplace. Now, I totally understand this quarter when you don't give a very good outlook, regardless of the reason, even if it's supply chain, you're going to get taken to task. I think the order growth rate, I think it was around 16%. I think that was a plus for the quarter. But again, it all, the stock price is based on, the future cash flows infinitum, and, this little blip in the next quarter, and they got hammered on it, which is too bad, because strategically they're doing exactly what they promised. And I don't like to see that, I'll be honest.
Yeah, it's a difficult situation for the company. They've been hard in a pivot now for multiple years, and that pivot is going to take a few more years. But I think at the same time, it was a necessary change, and at some point the market will appreciate the efforts of the company. I've largely turned my attention to the recurring revenue numbers in GreenLake for the business. It's not because the other parts of the business aren't important. It's because long and short, the market doesn't value capital equipment in technology very highly, but they value recurring revenue extremely highly. The multiples are 2, 5, 10, and sometimes more times, both trailing and forward guidance, depending on the exact company that you're looking at. The company made this commitment by the end of next year to be everything as a service. It's trending towards $800 million a year in recurring revenue. It grew 36%. They're targeting, on a category basis to hit 35 to 45. So they're meeting their targets, Pat, as you said. They're hitting those kind of baseline numbers. I think it could benefit by, of course, growing faster. I think they're going to have to continue to expand their services. But at the same time, I look at the offering, I look at GreenLake Central, I look at the fact that when you compare and contrast, because I will not count out Dell, I will not count out Cisco. Lenovo has been extraordinarily successful in there. But in terms of having a very complete, well thought out offering that's been built from the ground up to truly kind of support the enterprise and the complexities of hybrid and multi-cloud, GreenLake Central and a number of the different offerings that have come from the company have been really well designed. They've made some good wins. They've got some good partnerships with companies like SAP and Splunk. And, overall, Pat, I feel like it doesn't really matter what the company has come forward with. The market's just a little bit bearish on this capital equipment group. I think you look at Cisco and Dell, just as a quick contrast, their growth was only slightly better, and it was better, and you've got to call out what is what is. But, in a lot of cases, like Dell has had an extraordinary result in PCs that is really has backed its bigger growth number. Its last quarter was amazing, but, they had like 30+% growth in PC. HPE doesn't have that luxury. Even like Cisco has that massive service that's attached to all their hardware that's always been huge. And then they got WebEx too, which is another big subscription revenue that hit that secular trend of collaboration. HPE was one of those businesses that most of its subset, besides maybe Aruba, was really hurt during the pandemic by the lack of on-prem infrastructure deployments. And so building out this hybrid plan, building out a consumption model, getting it to market and scaling it is not an easy task. But I do feel, like you said, the company has been meeting its promises. It's been meeting its growth rates. Guidance, unfortunately, right now is a trigger. And when your guidance isn't good, it can lead to a massive sell-off. And even when your guidance is okay, it can lead to a pretty big sell-off too.